everyone. In this video we will solve a question on. Okay, so this question says that the balance of the control accounts was 20470, which did not match with the individual ledgers total balance, which was 18,740. So they listed down all the errors, and we have to identify that which error affected what. Either it affected the control accounts total balance or the individual ledgers total balance. So we will start by making sales ledger control. Okay, so we will start by making sales ledger control account, adjusted sales ledger control account. The balance BD is 20470, and the original sales ledger balance given in the question is 18,740. So these both balances do not match, so we have to adjust these following errors so that both of the balance matches. So we will start. A sales invoice for 960 had been correctly recorded in the sales journal but had not been posted to the customer's ledger account. So it was correctly recorded in the sales journal. There was no mistake in the control accounts or the day book, but it had not been posted to the customer's ledger account. This means that it has not been posted to the individual ledger account. So this means that we have to correct this by recording this entry to the individual balances, because it has been correctly recorded in the sales journal. We don't have to adjust the control accounts ka balance, we have to adjust the individual ledgers ka balance. Okay, so sales invoice 960. Okay, so the next one, a customer's irrecoverable debt of 250 had not been written off in any of the Rahim's books of account. This means that it was completely omitted. It was not recorded in the control accounts and it was not recorded in the individual balance. So we have to record it in both the accounts. So bad debts 250, bad debts 250. Okay, so a check received 670 from a customer had been correctly recorded in the cash book. It was correctly recorded in the cash book, which means it was correctly recorded in the day books. So no need to adjust the control accounts ka balance, because as I mentioned in the previous video, that if the day book is not affected, if it is correctly recorded in the day books, cash book is one of the day books, so no need to adjust the control accounts. But it says that it has been entered on the debit side of the customer's ledger account as 760. So as we all know that if we make trade receivables account, so the bank, the entry, if we receive cash or if we receive a check from our customer, it is mentioned on the credit side and not the debit side. So to correct this entry, to nullify this effect which is recorded on the debit side, we have to mention it on the credit side as well to nullify the effect. So this will be basically, so this is the error, and as we all know that bank the amount received from our customers is not mentioned on the debit side but on the credit side. So this we have to cancel this entry. So to cancel this entry we have to record it on the opposite side to nullify the effect. This will be CD 0. So the first thing to correct this entry is to nullify the effect of the 760 which was mentioned on the wrong side. Now moving on, we have to list down the correct amount a check received 760 from a customer. We have to record this transaction. So we will record this transaction. We received the payment, so the amount, the balance which our customers owe to us is now decreased, so we will subtract it from the original balance. Okay, so moving on, next, a check received 200 from a customer had been returned unpaid by the customer's bank. This is unpaid check or a dishonored check, and no entry in respect of the return check had been made in any of the Rahim book. So this is basically this entry has been completely omitted. It has not been mentioned in the control account as well as the individual ledger, so we have to mention it in both the accounts. So dishonored check comes on the debit side, and unpaid or unpaid check, you can also call this unpaid check. We will add the amount because the balance is again added because we did not actually receive the check from the customer. Discount allowed of 830 had not been entered in the control account. They had been entered in the customer's ledger accounts. So no need to adjust the individual balances because it's mentioned that they had been entered in the customer's ledger accounts. The individual accounts was not affected by this omission, but discount allowed of 830 had not been entered in the control account, so we will mention it on the credit side and adjust the balance 830. Okay, so this was pretty easy. Next, a contra to the purchase ledger 1370 had been entered in the customer's sales ledger. In the customer's sales ledger, this means that the individual ledger was not affected by this error, so no need to adjust this side, but it had not been included in the control account, so we have to include it in the control account. So the contra set off comes on the credit side 1370. So we have corrected all these errors. So if we calculate the balance CD now, it will, okay, so we'll total 20670. The balance CD on the credit side is 18220. The balance PD, which is the balance PD on the debit side, this refers to the amount which our customers owe to us from the control accounts, and after calculating this we get 18220 as well. So the balances have been reconciled. Basically, if the error hints you that this error has affected the individual balances or a customer's balance, so this side will be affected And if the error says that this entry has been completely omitted or no entries have been made to correct this, so this basically means that the balance of the error has affected the balance of the control accounts as well as the balance of the individual ledgers. So you have to mention it on both the sides. You have to adjust it in control accounts accordingly. And okay, so there might be some tricky